Okay, welcome everyone. I've been meaning to do this one for a bit, just to kind of help out some of the guys in my trading group with understanding the drawbacks to technical trading or trading with indicators, and why it sometimes it does great and sometimes it fails. So I figured I'd just do this as a generic one so I could share it with everyone. Reason being is on some of the websites that I frequent, I see a lot of people throwing up systems, indicators, everything. They work great, and then they're like, "Oh my God, it's failing." So I'm going to talk a little bit today about what happens with indicators and why they do fail. So technical trading is based off of just using indicators. On my chart, you can see I have value charts, Bollinger Bands, center of gravity, a few other things like pivot points, weekly, daily highs, lows, things like that. God, we could add in a bunch more. Let me see. I also use Ichimoku, which I would consider a technical trading system also, although price action comes into play with it also. As you can see, I have two charts for each pair that I trade. One is my system and the other one is Ichimoku. That way I have the capability to flip between reversal pullback trading and into trend trading for scalps. It's something I highly advise. Reason being is if you are a technical trader, you need to be able to adapt to market conditions, and you need to be able to recognize when market conditions change. The reason technical indicators fail are a few because people ignore the fact that market conditions are changing. As we see here on cable, market conditions have remained relatively the same all day long so far. If we look at euro, pretty much the same. This is AUD USD. We had a trend going up, but we could see obviously here the trend was going up, and I took a few trades here. Mine was from here up to about here on a pullback. But during this time, I ignored this system because the system wasn't designed to trend trade. It was designed for this right here, the range. It's designed for range trending, where Ichi is designed for trend trading. So it's a good idea to learn two systems, a trend and a range system, depending on how you want to trade on the shorter time frames. If you trade the higher time frames, I mean, the market's always either going up or down, so you could trade like that pretty simply. But for binary options, I do recommend having two ways to trade. Okay, so techno indicators, where they come from, why do they fail, what are some of the good things about them and bad things. Let's see, let me bring this up over here. So technical traders, I just put up a few examples here and reasons why I trade this way as I like it. Technical indicators, you could have things like pivots, Fibonacci, support and resist, which isn't really technical, but you can draw them on the screen, so they're kind of technical because there's a lot of indicators out there for it. Murray math lines, RSI, stochastics, can't say that, stock, Bollinger Bands, Ichimoku, all technical trading systems. Um, so my idea, like for pullback trading, things like that, and again, this is all dependent on market conditions, is my idea is I combine several of these things to do confluence trading. That's kind of how I do my pullbacks and things. It's a good idea to learn which indicators complement each other. For me, like a pivot point and a Fibonacci point lighting up with a support and resist, for me that would indicate that we're about to hit a pullback, because when price hits that, what do we have? Pivots are blue, Fibonacci, and these aren't real numbers. I just threw them up. So we have 12% of traders, 14% of traders, and 16% of traders. We're hitting damn near 50% when they see that level across several different trading systems, that they're most likely thinking either sell, get out of it, because that's where price is going to stop, and that's how you can predict a reversal. You could combine Ichimoku with RSI stock, but Ichi does a really good system, is really good at containing itself, but this is again just for example. So if I was trend trading and on the Bollinger Bands they just spread open wide, they look like I'm about to hit a run. RSI shows that I have plenty of room to run, and Ichi shows that I'm looking at a breakout. So we get like 21, 17, and 11. So we get almost to 50% that yes, we have a trend going. So basically what I'm trying to say is keeping the ideas how you're trading, and if you're one of these guys that's out there always throwing up systems or trying to put together a system to trade with, first make it work for you. If you're good at identifying trends and you need some help, all an indicator is, it's not something to live or die by. All it is to help you visually see what's going on with the market. It's just to assist you with seeing what is going on with the market. It's not set in stone. Why isn't it set in stone? Because someone else could be looking at a different indicator when they do a trade. You could have an economic reason for it. If you notice, I have news down here, so if news is coming out, I know to kind of ignore what's coming up. World events, Ukraine, Russia, what's going on there. Those can affect the market. Just a guy gets a hangover, comes in, and he has a shit ton of money and decides to say, screw it, I'm out of this stock. That can affect it. That's why I always, you don't want to look at a technical indicator as being set in stone. All they are is general guidelines for you to look at the charts and easily identify what's going on with it. A lot of people don't need all this crap on their charts. They can do price action trading, which is just, I guess you could say, looking at a chart naked and looking at how the candles move and identifying patterns and things like that to trade. Oh, sorry about that. I had to get a drink. So what happens, like, let's say during summer, Trading Access, which is the system I use, which we're looking at now, it fails miserably during the summer. Why? Less liquidity in the market. It's easier for price to get overrun, overpushed, to go overbought, oversold, just way beyond what it normally would. Um, as a trader, no matter how you're trading, one of the things you need to keep in mind that just because you're trading binary options, they don't affect the market at all. And just because price looks like it's going to reverse, there's no absolute set in stone saying it is going to reverse. The trading is based off of orders, and orders are based off of a group mentality. One person or one institution can rarely move the market. It costs millions of dollars. I think the last time I looked, Forex's daily was like 5.3 trillion per day is exchanged. So you can imagine the amount of money it takes to move the chart in the direction you want. When you're trading technical or any other ways, basically what you're doing is you're trying to get the mass mentality to all agree, kind of like what I showed with that pie chart. When you get enough people thinking the same way, the markets are going to do what the amount of people think it's going to do because they're all going to put those trades together. So when the market doesn't work out your way, don't get upset. Just keep in mind the market is random. No one can predict 100% of the time what's going on with it. And in technical indicator, there is no magic in it. It is just a bunch of it's a mathematical formula to plot on your chart for you to visually see what's going on. Again, by combining them, in my opinion, you can get a better idea of what's going on and see by using price action, which is a point I'm coming up to, whether that indicator is accurate or not. Now, I would consider myself, when I first started off in 2008, I was purely a technical trader, and I'd never thought of things like that the market moves because of orders. I honestly would look at a chart and I'd say, here's a daily pivot, price has to reverse there. It, and I think that's a common mistake that people getting into binary options or even into trading make, because they think just because this indicator says price has to react there, it doesn't. The market's going to do whatever the hell the market's going to do based on orders coming from real people, and the orders are what move the market. There's high frequency traders, which are just basically black box computer systems that trade, retail traders, the big banks. All that combined into one is what moves the market. It's not the indicators on your screen, it's the orders coming from all those different people are what make the market move. So if you think about it, really, it's quite amazing some of the results you see out of people, considering you're basing your trades off of a bunch of random people putting trades in together, and the cumulative result of all those people are what make the market move, and sometimes it does it quite accurately and quite predictably, and sometimes it doesn't, but that's because at the certain time not all these people are thinking the same. So I think it'll save you some frustration levels and maybe help you identify why there is no one set way of trading, is that nobody in the world uses one set way of trading. If we did, markets would be perfectly predictable and it would be easy to do. As you learn to trade, and if you're a technical trader, I definitely recommend picking up some price action skills. They can complement your trading indicators to help you see if price is being respected at that level. And if you don't know how to tell if price is being respected at a level, then your indicators are going to fail you, because you're going to be blindly trading an indicator. Um, if you're thinking about putting together a system for yourself, or you're looking at what indicators you want to use, first you want to go back to, I'd say, look at a blank chart and say, well, I can identify this kinda, but I could use something to help me out, and start there. Everyone's trading is personal to themselves, and what I can see on one chart easily, another person could look at a chart and say, I don't know what the hell you're talking about. I see no reason that price would reverse there. I see no reason that price would continue to go up there. But for me, how I build my charts complements how I see the charts. So the indicators are there to help me and assist me. Um, Good lord, my phone keeps beeping. Let's see. I guess a little bit about, and then we'll wrap it up. A little bit about how I got to the point where I was building my own systems and things like that. You'll notice on most of my charts I do use value charts, except for Itchy I don't, but even now and then I throw it in, but I don't have to because, like I said, I have cable on this, and here's my cable also, so I have the two next to each other. How when I got into trading in 2008, I was a mess. I mean, like I said, I was purely a technical trading indicator. I had no idea about orders, what moved the market, nothing. It's a good idea to research, do a little bit of study on how the market works. It'll help you comprehend what's going on. Just because you're trading binary options, the chart that I'm looking at here, I use to trade live on my Forex account, and I use, and I use this to trade my binary options account. Now, one's trading actually with the market through an exchange, and the other one's not. I'm trading with an imaginary person on the other side, or the broker. And on this chart, I'm trading with a real person on the other side. So, if you get my drift here, they're both still based off of a live market. Just because binary options doesn't affect the market doesn't mean what you're looking at isn't the live market. You need to keep that in mind when you're trading. I guess back to how I put everything together. I started off, like I said, 2008, purely technical trader, and I was a mess because I thought technical indicators there had to be a combination that would always be correct, and I slowly learned that's not the case. Just be prepared for your losses, take it in stride, find out what works for you and what doesn't. If something works, generally speaking, if you can get a set of technical indicators to work for a week or two, what you need to go back and look at is the market conditions when they worked and see how you can identify again when you have those same market conditions. And if you can't, scrap it and start over again. One of the ways I learned it, and I didn't run across this one until about 2000, I think, 2009, 2010. This is a book that I have. You can get it for like $18. It's called Dynamic Trading Indicators. It's actually by the guys who wrote value charts. But in it is what they do, and they describe. Yeah, you can get it at $18 hardcover. If you Google it, you might be able to find it some other ways. I'm not going to say how. But one of the parts they go through in the chapters is how to combine value charts for trend trading and reversal trading with other indicators, and it shows you basically how to make your own complete trading system, and once you've set it up, how to backtest it, how to run it, and how to make sure it works together well. Not saying you have to go out and get the book, and I don't want to, like I said, I'm not taking credit for anything. Most of what I learned was from reading and trial and error. This one will give you a nice head start, though. If it's something you ever want to look at, it's a very good read, and it helped me a lot out on developing a system and putting it together for my trend trading and for my reversal trading. Other than that, that pretty much sums it up, guys. I had requested to do the video on how Trading Axis came about and how some of the trend trading systems I use came about, and how sometimes when people ask me for help, the first thing I ask them is, well, how do you trade? What's your idea of how you trade? Because what works for me ain't gonna work for everybody. That's damn well for sure. So you need to basically invest enough time first to figure out if you know enough about trading to even put together your indicators or price action trading. No matter what you do, whether you go pure price action or if you go technical trading, price action, I will say, is paramount. You have to have it. And the next thing you're going to get, even with a technical trading system, you have to do the screen time with a technical trading system. Backtesting is nice and all, but even, and trust me, I've paid for data because I wanted to get 99.9% of my data correct so that my back testing was as accurate as possible. And I'd get great results out of it. I got 80-90% ITM, but then when you put the thing live, it fails. Don't count on back testing, count on forward testing. So you always want the screen time in there to do the forward testing. I guess that pretty much sums it up, guys, gals, traders, whatever you want to call yourself. Hope you enjoyed the video. If you have any questions, as usual, just hit me up, and you all have a great day.